Hi guys, I hope all of you are doing well. Welcome back to Your Nifty Guy. One thing that separates consistent traders from the rest is the power of planning ahead. Markets can be unpredictable, but when you walk in with a clear plan, you don't just react, you execute with confidence. In today's video, I'll share how I am preparing for Monday's session, step by step, so that you too can approach the market with clarity instead of confusion. But then, before we get into today's analysis, I want to take a couple of minutes to address a comment I received on the last video regarding sharing of screenshots as well as proof of me actually taking the trades that I mention in the videos that I do here. Now, I completely understand where that comes from because in today's world, almost everyone is sharing trading content, is also showing profit screenshots. But here's my view. Profit screenshots don't really add any value to your trading journey. In fact, more often than not, they are used as marketing tools by people who want to sell you a course, a premium Telegram group, or some kind of a subscription. My purpose here is very, very different. I'm not trying to sell you anything. My only intention is to simplify trading and share my way of looking at the market. If my analysis and the thought process I share in these videos can help you develop clarity and structure in your own trading, then I believe that is far more powerful than me just flashing a screenshot. That being said, I also want to be very, very transparent. If anyone is genuinely interested and would want to verify, you are welcome to contact me directly. I'll be more than happy to invite you to my home, to my office, which whatever is comfortable with you, where you can check whatever you want to check. I've got nothing to hide, right? From the very, very start, I have been very, very transparent about how I take things ahead. Uh, and I believe in one of the earlier videos, I had also mentioned that the if I share the profits of my last quarter or if I share the profit of my last trading financial year, the views that that particular video will attract or the kind of subscriptions that can get to my channel is far more than what the regular videos are getting in, right? But then that is not the aim for me to get into somebody showing you the lucrative side of trading because the profits or the overall profits that you generate in a period can depend a lot on your capital size and what usually happens is people get taken away by somebody else's profits. Now, those are not their own profits, but then they somehow relate that that is the kind of figure that they would also want to magically achieve, which is not the right thing, right? So, I hope this clears the air. Let's now move forward with today's analysis and focus on what really matters, the charts and the plan for tomorrow. So, for Friday, what we had planned was that we are looking for a short trade below this low with a pullback. Now, the markets opened with a gap down, went below, and this also broke down below the support zone, gave us a pullback, went sideways for some time. And this is where I entered into the first trade at around 11:15. This was as soon as this day's low was taken out. This is where I entered the first trade. Markets gave the SL initial SL planned SL was above this particular swing high. Markets gave a pullback again, went back below. The SL shifted my SL around this place, which got triggered pretty soon, right? So the first trade of the day, this was which I closed in red. Now, the reason of getting or shifting the SL so very quickly is because of the continuous RSI divergence, which you could see on the 5 minutes time frame, right? The markets was making new lows, but then RSI was making a new high. And after I took my SL, you could also see on the 5 minutes time frame, the structure had changed, right? Try to be here with me in this analysis, right? If you can see from a lower high, lower low structure. The structure on 5 minutes at least changed to a higher high, higher low formation. But then again, around here, the markets came down and broke down below the day's low and also taking out RSI divergence. Now try to understand how do we look at RSI divergence. This was the swing which was created when market took this particular low out. Now, if you look at the value of RSI around here, I'll quickly downplay this so that you can actually look at the values. So yeah, when this particular low was created around this, the RSI was at 30.23. You can look at the values at here when I place the cursor on the charts. So around 11:35, this was the last point where 30.23 was the RSI. Around here, when the markets broke down, it was 29.11, right? So, talking in numbers wise, the RSI did go back below the previous swing low, major important swing low. Right now, this is something which I call as a structure within a structure, right? On the majority time frame, this was the initial, the disturbance or the manipulations which is going on before the actual move comes in. So that was the reason I looked at this particular swing and not these things. These swings, even if you look at these swings as the prior swings, the RSI there was no divergence as such. And with after this pullback, this is where I took the second trade of the day. Shorted markets again. What here? Stop loss being extremely small, just above this particular green sideways action. Markets gave a good move in my direction, gave a small pullback, again moved down. I moved my stop loss till this on around this swing, which got the trailing stop loss, which got triggered pretty soon. And I closed the day in green, despite my first trade being in red. So that is the reason why you need to focus on multiple points and look at the market in a holistic approach. You don't need to wait or predict anything. But we are already prepared, right? We already knew below this green zone, we are in a negative territory, right? So we have to be prepared. But then again, simply being prepared that, okay, I have shorted, if I would not have exited the trade that I had taken around 11:15 at the break of this particular low, I would have still closed in green. But then is it worth it to carry on with the trade once you're observing that, okay, the structure is changing as well, plus the RSI is showing you some divergence? Absolutely not. That proves my not actually proves, but then again, that also says a lot about the second point, which I always say. So in case if you are going ahead with a planned stop loss, you should always go ahead with a planned stop loss. And when the market comes back and takes your SL, please gladly accept it. In case if your view is right and market is eventually going to go in your favor, we can always get a re-entry, which we did get around here, right? We did get a breakdown. Again, the RSI divergence was gone. We did get a pullback and we could enter. Now the market moved from this to this. It is not necessary that you have to capture the entire move and only then will you be called a successful trader. Catching a part of a bigger move, but actually being profitable is what matters rather than trading recklessly and then simply avoiding and simply taking any trades that comes your way and then sitting down with losses, right? So I hope the point is clear. And now for Monday, I don't think we need this anymore. We don't need this anymore. We'll first start with the weekly time frame. The internet is acting. Just give me a second, guys. Yeah, so just trying to fix the internet. Cool. So on a weekly time frame, the double bottom breakout that had come has failed, right? We broke out above this and we are back around here. Now, there are two ways to look at it. Either it is that the double bottom has failed, or this is just a pullback. And I believe this is the zone that we had drawn. Yeah. So we are well below the 0.5 to 0.618 zone on the weekly time frame as well of this entire up move which came in from here, the 3 weeks of up move that has been taken away. The majority retracement is being done in 1 week itself. So we are in a negative territory. I'll keep this level around here, but then I will change it to red for now because once we approach it, the same levels which would have acted as support will now be acting as a resistance for us. On a daily time frame as well, we can see I'll also be extending this gap area. This gap is still pending. This particular low that was important for us will now be shifting to this low, which also happens to be the gap upper end of the gap area, right? Now, on the 75 minutes time frame, I have been telling you that the structure is completely sell on rise or bearish with lower highs and lower low formations from around this point when the structure had changed. I'll keep the plan of action. Again, we'll keep the plan of action extremely, extremely simple. First plan will be if the market opens flat and we get a negative candle, which breaks down below Friday's low, and then the high of that candle gets taken out, will take a trade on the long side. Now, this is a very, very elusive and a very rare trade, but then again, I keep on saying about it. I'm still waiting for the day when the markets will actually give me a live example, which I can show it to you guys. But then again, this is something which I'll keep an eye on in case if market opens flat with a slight gap up, then we break down below this particular low, then the high of that candle gets taken out. That is a trap system that I use personally, wherein people who would have shorted the logic behind that is very, very simple. People who would have shorted the markets below Friday's low, they will be trapped and their SLs will be triggered, which can give a momentum on the upside. Now, if I am trading this around, these are the levels where I will be looking at booking my trades. Around here, if we get any negative price action, we'll be taking a short trade. Below this, we are planning a short trade anyways. Let me quickly also check. uh, If we have any further levels to go along apart from this, we have been falling very, very steeply from these highs. Absolutely no swings. I will personally suggest to avoid longs for now until and unless for one single day we are getting a closing above the previous high, right? Again, we might even get a short covering, but then until unless we get a closing above the previous day's high, I don't think we should create any long entries for now. So yes, I will avoid any trades on the long side except for this particular scenario for Monday, whereas we'll also be observing the price action closely around these levels. Uh, we'll keep the trade plan very, very simple. We are in a negative territory. That is what we have established. The market structure on higher time frames is bearish, and will be focusing more of on the trades which are on the short side, right? So yeah, that wraps up my today's analysis. Remember, profits on a screen may look exciting, but it's the process, the discipline, and the planning that actually create consistent results. If you found value in today's video, don't forget to like it, subscribe to the channel, share it with someone who could benefit from a clearer approach to trading. This is your Nifty Guy wishing you clarity, confidence, and control in your trades. I'll see you in the next one. And once again, if anybody is interested in getting inspired to the world of trading with a flashy lifestyle, I would like to invite you to my home. I believe once you visit my home, contact me. I'll share the details. Once you visit my home, looking at my home, you would be not wanting to look at the profits. You will be convinced about the trades that I take or the power of trading, right? So I'll leave you on that thought. And yeah, cheers and thanks for tuning in.